When I say the market, we're talking about institutions that are trading significant amounts of options on the S&P and the periphery that surrounds the VIX and the volatility indices. We're seeing a significant amount of hedging going on right now. And again, going back to the 3-month VIX divided by the 1-month VIX, this yellow line, it's suggesting that right now, this is the highest since December of last year in terms of volatility expectations in the coming weeks. Essentially, what the market is saying and the pricing of these options, and who's driving the pricing of these options? Institutions. They're suggesting that volatility expectations are the highest we've seen the entirety of 2024. So what do we have? We combine the fact that, look, the skew is saying, look, they've never been hedged, maybe a couple of times ever. It's all been this year. The market's expectations for future volatility have never been higher. This year is the highest this year and comparable to what we saw at the end of 2023. We don't get much higher than this. We have in the past a little bit. We've had times where we've hit excess in 2021 as an example. But normally we don't achieve these peaks very frequently. And when you do, you got to take notice. So the question is not a matter of, do you short the market, punk? No, right? This is not a dirty, hairy moment, right? We're not saying, do you feel lucky, punk, and short the market? What we're suggesting is what? The idea is taking profits. When do you plan on doing it? Are you going to have diamond hands riding into the beginning of 2025? Are you going to be hodling all the way into early 2025 and then seeing what the market gives you? Or do you say, look, I'm going to take it while it's hot. I'm going to grab it while I can and take those profits off. What I'll share with you is a little statistic, for example. The S&P, the biggest drawdown this year was a little over 8%. The biggest drawdown in the NASDAQ was 13%. Guess what the average drawdown in the NASDAQ was? It was over 40%. So the problem is most people are in a lot of meme stocks. Let's bring up Palantir here, right? If you're one that's out there riding the memes, you've done great this year. Hopefully you didn't buy here. Hopefully you bought back here, maybe here, okay? But do you realize Palantir to be down 30% in a day would be easy for it to achieve? Not likely, but easy. What do?